Hi, this is Poonam Sharma and welcome to Sadbhawna News. The new financial year begins on 1st April. Union Finance Minister Nirmala Sitharaman, presenting Union Budget 2021, had announced a slew of changes in the income tax rules. These changes are set to come into effect from tomorrow, 1st April 2021. So let's take a look at the changes announced in the Union Budget in February for income tax, which will come into effect from tomorrow. TDS. In order to make more people file income tax returns, the Finance Minister has proposed higher TDS, that is tax deducted at source, or TCS, tax collected at source, rates in Budget 2021. The budget has proposed the insertion of new sections 206AB and 206CCA in the Income Tax Act as a special provision for the deduction of higher rates of TDS and TCS, respectively, for non-filers of an income tax return. The individuals who have not filed the income tax returns, however, have a TDS or TCS deduction of more than ₹50,000 in the last 2 years will have to pay TDS or TCS subject to a minimum of 5%. Here, the deductor will now become responsible for collecting the ITR proof from the individuals for compliance, Archit Gupta, founder and CEO of Cleartax, said. Option to choose new tax regime instead of old tax regime. The government had implemented the new tax regime last year in Budget 2020. However, the exercise of choosing one of the tax regimes for financial year 2020 to 21 will be required to be made starting from 1st of April 2021. Taxpayers still have time until 31st March 2021 to make tax-saving deductions. However, they will be able to opt for a beneficial regime at the time of filing their ITR for financial year 2020-21, Archit added. Senior citizens above 75 years exempted from filing ITR. To ease the compliance burden on senior citizens, Finance Minister Nirmala Sitharaman, while presenting Budget 2021, had exempted individuals above 75 years from filing ITR. The exemption will be available to only those senior citizens who have no other income but depend on pension and interest income from the bank hosting the pension account. PF tax rules. In the budget for 2021 to 22, Finance Minister Nirmala Sitharaman capped the tax-free interest earned on Provident Fund contribution by employees and employers together to a maximum of ₹2.5 lakh in a year. She then raised the limit of tax exemption on interest earned on Provident Fund contribution by employees to ₹5 lakh per annum in specified cases as against the proposed ₹2.5 lakh. The up to ₹5 lakh contribution does not include the employer's contribution. Pre-filed ITR forms. Individual taxpayers will be given pre-filed ITR in order to ease compliance for the taxpayer. Details of salary, income, tax payments, TDS, etc. already come pre-filed in income tax return. To further ease filing of returns, details of capital gains from listed securities, dividend income and interest from banks, post office, etc. will also be pre-filed. The move is aimed at easing the filing of returns. Ltc Scheme. The central government in Budget 2021 has proposed to provide tax exemption to cash allowance in lieu of leave travel concession, that is LTC. The scheme was announced by the government last year for individuals who were unable to claim their LTC tax benefit due to COVID-related restrictions on travelling. This scheme is only available till 31st March 2021. That is, money must be spent by this date to avail of this scheme. Powered by Arthros Clinic, a dedicated center for arthroscopy and sports injuries.